Welcome, guys, to another edition of Wednesday Live, a program that is free of charge, where I give my thought and opinion about the market, and sometimes drop some secrets that I use in making my money as far as FX trading is concerned. Without wasting much of our times, I want to look at DXY, okay, because DXY will give us idea of where we are going next, okay? And if you look at what's happening right here, DXY, we see that we are going through corrective structure. Just want this to come down a little to this level. Here, we're going to be looking for opportunity to the downside, and you can still look for sell opportunity for DXY, because of course you look at it in daily time frame. See right here, you have this big engulfing candlestick pattern coming from this zone where you have rejection. Okay, so you should expect that this is going to make a move, a push to the downside to break this low. This low must be taken, guys. All right, so which sell opportunity do we still have? Right, if we go to lower time frame, you will see that right here you have this big push to the downside, okay, leaving a lot of inducement, and for people who do not know what inducement is all about, when you have a break of market structure, okay, when you have a push down or push up and you have a break of market structure, the pullback before the break of structure is called inducement. So when this one came, we're supposed to come up to break this top before we sell, but it didn't happen. We push down again. All right, we push down again. So when we push down again, you have a break of structure right here again. So this one is supposed to come to break this top. So right now you have inducement here. But I would not want to consider only this inducement alone, because by the time you take this fib right here, you can see your premium zone where you are supposed to look for sell is far upside here. So if that is the case, what should we expect? What we should expect is for this move to come to the upside, break this top, and come here before we look for sell. All right. Then the question now comes, why do we call this pullback? Why do we call them inducement? Why do we call this one inducement? Inducement. Very important. I'll show you now. The reason why we call them inducement is that market will come to this level and give you a sell, and you would automatically sell, whereas it has not gotten to the level where it should sell. So it's inducing you to sell, whereas it is sell to buy. It will get here to this same level for people trading smart money concept, trading support and resistance. It will tell you to sell because you are the resistance. For the smart money concept guys, they say this is the other block. They want to sell here. It will induce you to sell and rig you to the upside. Come to premium level where you have imbalance here, and then that's where you get break of structure in lower time frame, and that's where you look for sell to the downside. Can you now see why we call this pullback inducement? And then when you have 2 or 3 consecutive inducements getting close to each other that you can connect with a trend line, we call it trend line liquidity. Okay, and every trend line liquidity must be taken to the upside, okay, or to the downside, depending on whether it's a buy, it's a downtrend or an uptrend, before you can look for a sell opportunity to the downside. So that's my thought on DXY. We need it to push to the upside And that means that you need the majors to continue to push to the downside for now. You need the majors to keep pushing to the downside. Okay? You need the majors to keep pushing to the downside. So right now in euro dollar, we are at the top of the range, but I can assure you that euro USD is not going to fall from here, guys. It's not going to come down from here. Where is it going to see the volume? Liquidity rests on top, right here. So at the present price level, there is no volume to push it to the downside. So what it can do for us is to correct downward a little and then find enough order to push to the upside to break this top. Okay, from here, can I be looking for trade opportunity to the downside? All right. So if you want to look at it by virtue of Elliott wave theory, you see that this is a simple corrective structure right in the middle. Okay, simple running flat right in the middle, and then you have the impulse, you have the correction, the way of running flat, you have this impulse. Can you see that this last impulse is not up to the length of this first impulse? That is why this must break this top to the upside. So when you look at it very well, irrespective of the method you trade, the chart is supposed to give you the same readings. Okay, the chart will definitely give you the same readings. Okay, so we need euro dollar to push to the upside, but before that upside, we might get a correction, a corrective structure before we move to the upside. So just take note of that. But as for me, I do not see a setup on euro dollar until this leg is completed. This leg must be completed to the upside, where all these levels, all these inducement level are taken. Can you see market got here, break structure, induced to sell? Okay, this is inducement to sell. You have another one here. It didn't break it. It broke it a little, but right now we want it to come to the upside to break this level before we look for sell. Okay, to the downside. Is that okay now? So that is the focus on what do you call it? Euro dollar. Okay. AUD, USD, the same thing is applicable to this. We are not going to sell. Any sell you do right here, it's an inducement sell, guys. It's an inducement sell, because right now you are at a level that, you know, most of retail traders love so much, because it is resistance. Okay, say rejection here, rejection here, rejection here. That's the language of their mentors. Rejection here, rejection here, rejection here. Okay, the meaning of those rejections is an inducement. Okay, you are being induced to sell here. This market want to come up very well, but you are being induced to sell here. Okay, you are being induced to sell here. Just at right here, can you see? So induction to sell, induction to sell, induction to sell. After this got here, we cut this buy up to this level. Okay, and on getting to this level, it lost momentum to push harder. So as it corrects back to discount, okay, we have to take the trade, boom, again to this level. So if it cannot take this level to the upside, then it has to correct back to discount. Okay, then from there, we take it to the upside. All we know is that this level, guys, must be broken to the upside. No meaningful sell to the downside will happen in as much as this level is not broken to the upside. That's what I want you to know, guys. That level must be taken to the upside. And we can look for buy only if this move right here corrects to what? A discount. We can look for buy right here in anticipation of what? Is smashing this level. So some people have been induced to sell, but you should think smartly, to think like a smart man. Look for buy right here. So It means people are being induced to sell, but they are falling into your hand to buy here. Okay, and you'll be part of what will rig them out. Take up all this high. Okay, as soon as you take up this high, anywhere, any level here, okay, that you see a break of structure to the downside, that is your trade. Okay, that is your trade to the downside. So you must take note of that. USD card. Okay, USD card. Of course, we saw that DXY was supposed to make corrective structure to the upside. Okay, and the same thing we are seeing for USD card. Can you see this move? Very strong. Okay, if you look at it from daily, you will see that buying this kind of assets that have developed so powerful move like this will not be a good idea. So you can see we have a powerful engulfing candlestick pattern with a good imbalance. Look at imbalance zone. All right, so what do? What we must do is to find an inducement level. You must look for your inducement level. So you can see all this break of structure. We have to analyze the kind of correction we should get right here before we get involved. Okay, because we know that having this impulse that broke structure will have this correction. Okay, and if you look at it very well, I told you when you have inducement coming next to each other, it will form what is called trend line liquidity. That's exactly what you have seen. And then when you break that level to the upside, you look for sell. I think we'll cut this sell. Okay, now what do we do next? Selling here make no sense. Why do I say selling here make no sense? If you come to this level and take the fib to the downside, you will see that typically you are at discount. You are not at premium. So why will you sell at discount? This is premium level that I've showed you here. So look at where the market is, and you cannot sell here and you cannot buy. You cannot sell in the sense that you are not at premium, you are at discount, and you cannot buy in the sense that this is a downtrend. So buying this kind of setup amount to counter trend. Okay, so if you go to lower time frame, you will see that clearly you have your area of inducement. Okay, broke structure right here. Okay, and here is the pullback before the sell. This pullback, unless it is taken to the upside, you cannot sell. If you sell, your selling is not going to do well. So if you look at this right here, why do we call this level inducement, guys? Because market will get there and react. Okay, because this is resistance. It must play. It must play to those trading support and resistance. It will give them a little pips, but rig them to the upside, to this level, to your discount level. And this is where you should be looking, this zone, anywhere in this zone, you should be looking for anywhere in lower time frame that you are having a change, a break of structure, change of character, and all those things. You look for your entry around this level, not here, not around here. Anywhere here, you don't look for your entry there. Don't look for your entry there at all. Allow this guy to be taken to the upside before you sell. And when you are selling to break this low again. Do you understand? This is how you do it, that you get a better risk to reward in your trading. Okay, UJ, you see the same thing I've done in higher time frame. What we want, what I expect UJ to give me is simple. Do you see this? Do you see this? 1, 1, 2, and 3. So I want UJ to give me this push to the upside, right to this supply level. See this? Beginning of this, it's a big supply. Do you understand now? Because it broke structure and it had a lot of imbalance. So it qualifies as, this point qualifies as order block, okay? Because this push to the upside has imbalance candle, it broke structure, okay? You will know it broke structure if you go to lower time frame, all right? So what we are looking for is simple. We want a situation where this one push to the upside to this level where we'll sell, or if we are interested in the buy, then it's simple. What we have to do is to allow this to take this low. You can't have a comfortable buy at the present level. It's not going to work, okay? What will work is if this push up to the upside and drop down. As soon as we take this low, good, market can find a better momentum to move to the upside, okay? And take all this high, take all these highs again before you can look for sell. This is how you make your projections, okay? Then pound dollar. I've not been involved in pound dollar for quite some time because it has not been consolidating. All right, the consolidation is not enough, and every move it makes, it doesn't bring itself to a discount or premium for sale. Okay, as far as I'm concerned, if it doesn't come lower here, I don't look for buy opportunity. Okay, and right here I saw a lot of people look for sell opportunity. That's okay, but all these that's happening right here, they are all inducement sell. They are all inducement sell. Okay, you see the market right here coming down, coming down, coming down, coming down, coming down. All these are inducement sell, guys. This is a fake level. This is a fake level. Okay.
Hello.
That's a fake level, guys. All right. So what is the level that is original? Okay. All we have to look forward to is for this stop to be taken before we look for sell. If it's not taken, we are not going to find it easy trying to sell at this level. Not going to give us a good one, except you just want to scalp. Okay, except you just want to scalp. All right. Another thing that we can expect for GU is if GU correct to break this low, okay, it's still going to go up again to break this top. It's still going to go up. All right, it can't come down, at the present level. Okay, we have not seen in after backtesting tons of data that a market reverse at inducement level just keep going down. No. The reason is simple. It does not find enough volume at this level to push down. No, volume does not lie here. Liquidity does not lie here. It lies above. So if the market does not break above, it's not going to find volume to fall down. Okay, so every sell you are seeing at this level is a retail sell. Okay, retail sell, not the main sell. All right, so that's it about GU. There's no trade setup in GU. It's just flashing up and down. Okay, look at it. It has come down, it's going back up. This is not trading, guys. This is not trading. This is not trading. Okay. I think I have to close this trade now. I caught, let me tell you what I did. You see at this level here, you see, I told you the significance of a level like this. This market is not going to flush to the downside right here. It's not going to go down right here. Why? Volume does not exist here at the equal top here to push it down. So I capitalized on that. When it came down on lower time frame, I capitalized on that to take this trade to the upside. How did I go in? Okay, how did I get in? Simple. In the morning, London session, okay, we had this move to the downside. So I took this, I expected this to come, break that low, break this low before we have this move. It didn't break it, but we have this move and this correction. And I took my trade, boom, to the upside. So as simple as that. Why did I take the trade to the upside? Because I knew that this guy cannot fall down to the downside like this, because order is not enough to push it. So it must go back to the upside to break this top. Based on that, the confidence came that I had to look for buy. Okay, I had to look for buy. So whatever be the case, it must find a way to break up like this before selling. So that's how you look at the market. Okay, and moreover, look at this. You see this equal low here? There is no way the market can fly to the moon, okay, by developing equal low here. Can I show you an example? I've told you this severally in the past. Let me give you an example of GBP AUD on daily time frame. When it was here, when it was at this level, what did I tell you? What did I tell you? I told you that GBP AUD is not going to make any push to the upside until it comes down. Why? There is no order here to push it up. Order resides at the low. And what did it do? Push down. After pushing down, break structure. Right now, what we are looking for is for market to give us a complex correction right here and push up to 84. I projected 84 more than 7 months ago, and it's gradually approaching 84. It's at 80, but we want this correction to come down to demand level. Okay, demand level. All right, and then we take the trade to the upside again. You get? Okay, so GJ. GJ. All right, so if you look at GJ, right from time, we have seen this. Okay, you see this level? I told you, or each setup I see, or each pair I want to analyze, I always give you this idea. When you see equal low like this, just know you are going to take it. And you have to analyze, how did you take it? Did you take it with speed or with correction? If you took it with speed and you also left, you also left demand zone with speed, it shows that this is liquidity grab. Okay, and then any correction that emanates as a result of this push up is a clear trade to the upside. Okay, and now you can see right here you have another clear break of structure. Okay, and when you have a clear break of structure, you have to, wait for correction. How do you define a break of structure? A break of structure has some important elements in it. Number one, it must have an imbalance candle. Look at imbalance candle right here. You see the wicks of the candle after it. You see the candle before it. Look at the middle. All right, that's imbalance candle. There you have excess demand over supply. And apart from that, it must break structure. It broke structure. And apart from that, you must see deceleration after break of structure. Not that it breaks structure and come down immediately. This will not be qualified as a break of structure. Okay, but when it breaks structure and it's now slowing down, this slowing down is intentional and it is meant to gather liquidity. Okay, so if you look at lower time frame, you will see that pound dollar is giving us this area of consolidation. I remember somebody asked me a question in the group, and I told him, he said whether he should sell pound yen, whether I should sell it at this. I said, I don't like to sell in this scenario. I would love to see consolidation. I would love to see this develop. And if this break up to the upside, then I'm not looking for buy again. I'll be looking for my sell setup. But if it does not break to the upside, but rather breaks to the downside, okay, but rather breaks to the downside, like this. Let me show you. If we break to the downside right here, we are looking for buy opportunity to come back to break this top. It's as simple as that. It's as simple as that. So consolidation will give you idea of what you are doing in the market. It will give you that idea. And when you are not supposed to trade, consolidation will also give you the idea. Right now, there is no setup on GJ. Why? We are in the middle, no setup. But where we will go next, this range will give us by either breaking below or breaking above. It will give us. Okay, so that's it on GJ. Then you apply the same principle on EJ. EJ is right at the middle, right at the middle. Okay, remember, this is your induction, inducement, inducement, inducement. So if GJ come here and is coming down, it's an inducement. Okay, remember, if you have this low right here, if you break this low, you are going to have your trade to the upside right here. It's as simple as that. But if you the market does not come to the downside, where you have inducement right here, if it corrects, push up and come down, okay, remember, it's rejecting at inducement again. If you push down here, okay, you are still going to go up to target this top. If you don't target this top, you are not going to have a meaningful sell to the downside. And if you look at it, by virtue of Elliott wave theory, you will see something that is very instructive. Okay, you have this big impulse right here. You have another flash up. You have 1, 2, and 3 in the middle. That's a corrective structure. You need this to what? Correct back to discount and give you a push to the upside to break this top. This will now make a complete structure. Where is the structure? You have a move down, 1, 2, and a 3, and a move down. Simple. So this becomes A, this becomes B, and this becomes C. Because the A, B, C right here, these are bigger structure, bigger B, bigger C. Then you have a move up, which is A prime. You have 1, 2, 3, which is B prime, and we have C prime. Simple. For those that do not have basic background of Elliott wave theory, you may not get this, but it's as simple as ABC, guys. If you watch a video, it's as simple as ABC. So what we are looking for right here is corrective structure back to this, fill this imbalance, come back to this other block. We look for trade to the upside to break this top. Okay, so next, US oil. I need US oil to give me a pullback. For Christ's sake, give me a pullback. Give me a pullback. I want US oil. You see this? Okay, this is an ending structure. Give me a pullback to this supply zone. Then here we look for break of structure on lower time frame and put the trigger to the downside. That's for US oil. And then for gold, gold needs to correct to the downside because it's gradually getting to an inducement level. All right, all this is an inducement level. Okay, you knew when we broke structure here, we needed to take this high. We didn't take it. We broke structure here. We needed to take this high. Yes, we took it. And then the market came down, but never broke this low. That is very instructive. If you come to my mentorship program, we will analyze why this. If it doesn't break this, what next do you expect? That is where we analyze it. Okay, market came this way. If you remember, I gave you this setup that this gold is going to come like this and push to the upside. And when it gets to this resistance, it's going to react. That's what is called inducement. Okay, that's an inducement. Okay, that's an inducement. And if this inducement reacts back to demand level, discounted level here, that is a trade setup. It's not going to come to break this low. It will come. It must break this top. It's very important. If it doesn't break this top, it's not going to find enough volume to come down, to come and break this low. It's as simple as that. Okay. So last but not the least, CAD JPY. CAD JPY, you know, it has been in this triangle-like structure for some times now. We caught some people right there yesterday. Okay, caught some people right there yesterday. So what we want is simple for this pair. If you look at daily time frame, you'll see that right here is consolidating, okay, like a triangle. Then it will be good if it can push to the downside to this level, then we can buy. Or if it doesn't want to do that, fine, let it push to the upside, then break this top, break all, then we sell to the downside again. So if you look at lower time frame, like H4, so H4, in H4 time frame, what we would like to see is this to return to discounted level. Boom. Where's my discounted level, guys? From that's from 60 to 60, 79. Any zone right here is my discounted level, and this is a thorough break of structure, because I told you part of the condition for calling a break of structure a valid one is if you have a deceleration after the break of structure, and all these are deceleration. Okay, and the essence of deceleration is to provide liquidity that will push you back to the upside. Where is the liquidity? Right here. You have it, all this zone here, build up liquidity. So we want this to come to the downside, pick this order right here, and this is at discounted level. Look for break of structure and get in to the trade. Where is your destination? You must go to break this top. You must come to this supply area right here. Okay, for you make a move to the downside. And if you analyze this based on Elliott wave theory, you will see that what you have analyzed is simple. This is a flat in the middle. You have a push up, then you have a push up. Okay, what of these flats down? Boom. Okay, that will now be complemented by this move to the downside. It's as simple as that. So let's look last but not the least in 1 minute, CHF JPY. Okay, CHF JPY. Okay, got some trade on it. Hit my TP. Of course, this pair consolidates a lot. Okay, so right now, I think it's leading other JPY pairs, because right now we have had three wave structure in the middle after this push down. So what we want now is 1, 2, and 3. Okay, this has to come up to break this top. Okay, it has to come up to break this top. So, and in that case, what we'll be having is you have this move down, 1, 2, and 3, and we'll have another move down. This will be your corrective structure in the middle. Prepare, I think Mark trade this pair, prepare to spend a lot of time in the middle here, because right here you have 3 wave structure to the upside, 3 wave structure in the middle. You're going to have 3 wave structure back to the upside, and then you now have a massive explosion to the downside. That is what you see here. That's the explosion here. You're going to have it to the downside. Okay, and probably that time it's going to break this low. Okay, but for now, let's concentrate on the piece that's happening right now. Okay, this must go to break this top before anything can happen. All right, so that's it. Any question in 1 minute? Any question? Any question? Any question in 1 minute? Okay, so in the absence of no question, you just have to pay attention to the forecast. Okay, it's not a financial advice anyway, but when I give a forecast, you do your own analysis. You can compare with my forecast. If it's in line with your projection, then I think you should be more valid than invalid most of the time. Okay, so see you next week, guys. Before I go, I've been looking for trades to give you in the group. I've not seen a good one. I've only been able to see short ones, and I don't give short trade out because I feel somehow to give you a trade right now, and in the next 20-25 minutes, I'm giving a modification to the trade again. I don't like it, and there's no time, for that. Okay. All right. So somebody say NAS 100. Let's check US 100. US 100. Of course, US 100 will always follow AUD USD. Okay. For me, this daily time frame. For me, I'm not going to trade indices for now because they are in the corrective mode and they are in the bottom of the range. Okay, look at this move to the downside. It broke your structure. So since it broke your structure, we are the inducement. It's an inducement. It's an inducement. So do not buy. Buy? No. Sell? No. Then if we have to buy, where should we buy? If we have to sell, where should we sell? Now, this is a downtrend, so buy is discouraged. Now, if you have to sell, where do you sell? This is an inducement that must be taken. This is double bottom. That market is still coming to smash it. So what you should expect is what? The market will come, go and write it down. If you come to this level, come down. That is the inducement we are talking about. Making some people to sell. And then when it gets to the discount, it now come up. Okay? So most likely, this pair is going to sell around this level, because if you take a fib of this level, you see that this is your premium. Okay, the price is only at premium at this zone. So you need to wait. You have to be patient. Remember this daily time frame, maybe next week, you have to be patient. Let this top be smashed. Okay, look at a lot of imbalance right here. Imbalance candle right here. Boom, boom. Wait here, smaller time frame, break of structure, boom, 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 sell. Okay, so that's it, guys. All right, so see you next week, guy, and trade responsibly, trade with care. Thank you, and bye-bye.